Okay, yeah. So good evening, all the participants. Again, today we will continue with investment decision. Yesterday, we understood what investment decision is all about. It is nothing but to decide whether to accept the project or not. And likewise, we studied two capital budgeting techniques. One was payback period, other one was discounted payback period. And we also learned how payback reciprocal is calculated. So today we will move ahead and we will start with the third technique called accounting rate of return or the book profit rate of return. See, in this technique, you have to focus on this word accounting rate of return. So the profit generated by the project, but from accounting perspective and not from the financial perspective. Are you getting this? Here you have to calculate rate of return. In this technique, it will calculate rate of return, but from accounting perspective, from taking into account the gap principles, the generally accepted accounting principles, and not the financial perspective. So can I say here relevance is on accounting profit and not cash flows. Relevance is to accounting book profit and not to cash flows. As the name suggests, it is more concerned with the accounting profit the project generates for my company, the project generates for my business. So the formula of this technique is ARR is nothing but average of net income after tax divided by initial investment or average investment. See, the difference between accounting profit and financial profit is only one thing. Let's understand or let's get back to the format that we studied yesterday. As far as accounting profit is concerned, we have to stop at this point. We have to stop at net profit after tax. Okay? Because from accounting perspective, depreciation is an expense. So as far as accounting rate of return is concerned, it is the formula is average net profit after tax divided by either you take initial investment in the base or average investment in the base. Is everyone following? Here we are not concerned with cash flows. Here we are concerned with accounting profit because the name suggests it is accounting rate of return. It's a very simple technique. Instead of cash inflows after tax, we just need to take accounting profit after tax, an average of that. Okay? So let's understand this technique better by taking an illustration from module. So everyone please open page number 7.22 of your module. 7.22 of your module. In case you have not opened, I have shared here in the screen as well. So my accounting rate of return, can you see the formula? The ARR is nothing but average annual net income. Here net income is always after tax divided by investment or average investment. Now they have provided one illustration. Let's see that. And let's try to calculate average or accounting rate of return, average rate of return or accounting rate of return or book profit rate of return. Suppose Times Limited is going to invest in a project a sum of 3 lakh. So can I say this 3 lakh is nothing but my initial investment? Yes or no? The life of the project is 3 years. The salvage value of the machine is 90,000. Means at the end of 3 years, I will get a scrap value of 90,000. The profit before depreciation for each year is 150. So they have given profit before depreciation. Okay? Then they have subtracted the profit after tax and the value of investment in the beginning and at the end of each year shall be as follows. So the question is profit before tax, profit before depreciation is 150 for each of the year. Depreciation is 70,000. And how did this 70,000 come? Can I say straight line method? Straight line method as per SLM, depreciation is nothing but original cost less salvage divided by life. We studied this in our 11th class. Original cost 3 lakh, salvage 90,000 divided by life 3 years. So 0.7 lakh per annum. So my profit before depreciation was 150. I subtracted depreciation of 70,000. So my profit after depreciation comes to 80,000. Now in this example, they haven't mentioned anything about tax. So we will ignore tax. Agar tax hota, if the question mentions about tax, then we would subtract tax as well from this 80,000. Okay? But यहाँ पे as of now there is nothing, no information on taxation. So my profit, my average or my yearly profit is 80,000. So let's calculate ARR. Now, as per our ICAI syllabus, there are 3 methods or 3 different ways to calculate ARR, and all the different methods or all the methods will give different results, and you are free to choose any of these methods. You are free to use any of this method. So first method of ARR is calculating accounting rate of return for each year separately and then taking the average. So method 1. Method 1 is calculating ARR for each year and then taking the average. Okay? So in year 1, my profit is 80,000 on investment of how much? On investment of 3 lakh. On the investment of 3 lakh. See, you can see the value of investment in the beginning of the year, 3 lakh. So that is 3 lakh in first case. So my ARR comes to 80,000 divided by 3 lakh into 100. 26.67. ठीक है? For year 2, again my profit is 80,000, but my value of investment at the beginning of the year, at the beginning of year 2 is 230. So I want 80,000 on 230. So my accounting rate of return for year 2 comes to, they have solved it for us, 34.78%. And likewise for year 3, again, yeah, correct. 80,000 divided by my initial investment or my investment at the beginning of the year is 160 into 100. So 80 divided by 160 into 100, it comes to around 50%. So can I say my average ARR is 26.67 plus 34.78 plus 50 divided by 3. Average comes to how much? 37.1. 15%. So this is first way of calculating ARR. You individually calculate accounting rate of return for each year and then average it out. Okay. So this is the first way. Any queries here? Anyone? Any queries? Any doubts still here? Second one is my favorite method. सबसे simple and very quick solving method. Method 2. Method 2 is you directly average out the net profit after tax and you divide it by initial investment. You multiply it by 100 because we need it in percentage. This method, the formula that I have written here, this is the second method of solving ARR. So can I say my average net profit after tax is not. How to compute the value of investment? It is given in the question. Why do you need to compute that? It is already given in the question. 3,230,160. So why do you want to calculate by yourself? Why do you want to make or prepare questions? Let ICAI do that. So average NPAT for 3 years is, can I say 80,000 for year 1, 80,000 for year 2, 80,000 for year 3, divide by 3 would be my average net profit after tax, and my initial investment is 3 lakh into 100. So it comes to how much? 80,000 divided by 3 lakh into 100. 26.67 method. This is one of the simplest way and the quickest way to solve ARR. ठीक है? And this is my personal favorite way because इसमें time बहुत कम लगता है. Third is method 3. Method 3 is you take average NPAT in the numerator. 3 lakh is the initial investment ना. Original investment is 3 lakh. Question में ही दिया है. Sambeshwari. See, it is written in the question. Suppose time limited is going to invest in a project a sum of 3 lakh. 3 lakh is the initial investment. Third method is you take average NPAT divide by average investment into 100. See, the difference between method 2 and 3 is only one thing. Here you take initial investment under method 2, but under method 3 you take average investment instead of original investment. Now what is average investment? Average investment is the opening investment at the start of the project, the closing investment at the end of the project divided by 2. That is average investment. In ratios, you would have calculated average debtors, you would have calculated average fixed assets. So how did you calculate that? Opening fixed assets plus closing fixed assets divided by 2. Opening debtors plus closing debtors divided by 2. That is how you calculate average, right? So method 3, average NPAT. Average NPAT would be 80,000 for year 1 plus 80,000 for year 2 plus 80,000 for year 3, the whole divided by 3. Likewise, average investment would be the opening investment. That is 3 lakh. See, the beginning investment is 3 lakh at the start of the year. The closing investment at the end of the third year is, no, not for all the 3 years. Average investment is opening amount of investment at the start of year 1, that is 3 lakh, and closing investment is amount of investment at the end of year 3, that is 90,000. Opening plus closing divide by 2. Okay? Into 100. So can I say it is nothing but 80,000 divided by 390 divided by 2. comes to 195 into 100. 80 divided by 195 into 100. 41.02%. So this is method 3 of calculating ARR. And from examination perspective, you are free to use any of the method, but you just need to mention it in the note that I have considered, I have calculated ARR based on original investment. Some of you would have been using average investment, then you need to mention it in the notes that ARR is calculated using average investment. So you are free to use any of the method. None of the method is incorrect, but you just need to mention it in the notes. Okay? Sir, in third case, can average investment yeah, but the answer is different, but that is, you will not get wrong in any of the methods. Divided by 2 because we are taking average of that. At the start of the year, my investment was 3 lakh. At the end of the year, it was 90,000. So we divide it by 2. See, you would have learned this in ratios as well. You would have learned this in, yes, answer in all the three method is different. Nathani has a question, sir, why divided by 2? Because we are taking out the average. Ratios में भी हम यही करते थे. We used to take opening datas, we used to take closing datas and divide by 2 to get the average amount of datas. Answer would be different for all. Yes. Bhavna has a question, sir. In third case, can average investment calculate as sum of all your investment divided by number of years? No, no, no. We have to just simply take opening investment, closing investment, divide by 2. It is as simple as that. So I would like personally suggest, you are free to use again any of the method, but the quickest and the simplest way of solving ARR is by method 2. It is very simple. You just take average of profit after tax for all the years divided by initial investment. Okay? Divided by initial investment. I am again repeating, in this example, nothing is mentioned about taxation. So we have ignored the taxation here. But if the question specifically mentions about taxation, then we need to calculate profit after tax. Okay? We need to reach till the point of profit after tax and not till net profit before tax. हमें profit after tax तक पहुंचना है. So again, accounting rate of return. Here you have to forget about the cash flows and you have to just focus on the accounting income, on the accounting profit, because the name itself says the accounting rate of return. So it is nothing. So the formula is average NPAT divided by initial investment, average NPAT divided by average investment, or you calculate ARR for each of the years separately and take it and take the average of those 3 years. बोलो कोई प्रश्न, any questions, any queries, participants? Easy to understand. Okay, please reply. Can we move forward now? Answer in all the methods would be different because we are taking different base for all the 3 methods. So it's okay. It's fine to have different answers. You will not get wrong in your examination unless you don't mention anything in the notes. So whichever method you select, you have to mention that in the notes to your solution. ठीक है? Shall we move forward in life? Please respond, yaar. I'm waiting for your response. Okay, no one is responding, so I think we shall move ahead. The next technique is net present value technique. Technique number 4, NPV technique. And this is very important technique. Practically, this technique is also widely used, and this technique is logical from other technique as well. So NPV technique is very important. So you need to understand this very carefully. Okay? Yesterday, we had a broad insight about this technique. We know NPV is nothing but present value of cash inflows less present value of cash outflow. This is the formula of NPV technique. You calculate the present value for all the inflows. Likewise, you calculate the present value for all the cash outflows, and the resultant amount is called as NPV. It's called as NPV. And if NPV is positive, Bolo, we should accept the project or reject. What is your opinion? What shall we do as a financial manager? We should accept the project or reject? Accept. Yes, that's correct. Accept everyone. So the outcome of this technique is, if NPV is positive, then you should accept the project. Likewise, if NPV is negative, it means the present value of cash inflows is very much less than present value of cash outflows. So you need to reject the project. Okay? Now we know how to calculate cash inflows. Yesterday we learned about that. How to calculate cash inflows. For that, we have entire income statement starting from sales till cash inflows. And to calculate present value of those cash inflows, we need discounting rate, correct? And we also learned how to calculate discounting rate. Discounting rate is nothing but your company's ichha, your company's expected rate of return or desired rate of return. If that is not provided, then look out for the industry rate. If industry rate is also not provided, then your discounting rate would be KO, cost of capital. And in 90% of the questions, it would be KO. And you would be given that rate in the questions. Okay? So we learned about present value of cash inflows. We learned about how to calculate present value of cash outflow. But let's learn how to present it, how to present the solution in case of NPV ka sum. If in the exam they ask to solve or to make investment decision based on NPV technique, so how our presentation or how our solution ka format will look like, let's understand that. Let me give you an example. Let's say a project life is for 3 years. Okay? Initial investment is 2 lakh. Initial investment is 2 lakh. Cash inflows for year 1 is 50. For year 2 is 150. For year 3 it is 175. And my required rate of return or my KO is 10%. So can I say this 10% will be my discounting rate? because there is nothing about desired rate of return and there is nothing mentioned about industry rate. Okay, so we know how to calculate present value of cash inflows. हमारा फॉर्मूला यही था, इट इज नथिंग बट फ्यूचर वैल्यू डिवाइड बाय 1 plus r raised to n. Yes or no? For year 2 it will be 150, 1 plus zero point 0.1 raised to 2, and for year 3 it would be 175, 1 plus zero point 0.1 raised to 3. Correct? This is how we used to solve. अब ध्यान देना, now again maths. मैं इसको ऐसे भी लिख सकता हूँ, कैन आई राइट दिस वे, 50,000 into 1 divided by 1.1 raised to 1. Yes or no? Similarly, I can write this way, 150 into 1 divided by 1.1 raised to 2. Yes or no? Normal mathematics. Now, take on Cal C and do calculation for 1 divided by 1.1 raised to 1. कितना आया? Take on Cal C this part. 1 divided by 1.1. 0.909 everyone. So this 0.909 is technically called as discounting factor. This is called as discounting factor. And this is nothing but cash inflows. This is nothing but cash inflows. 1 divided by, again, now try solving this. 1 divided by 1.1 raised to 2. 1 divided by 1.1, 2 times equal to 0.826. So again, this 0.826 is called as discounting factor. 0.826 जो आया, that is called as discounting factor. And this is called as cash inflows. So in most of the questions, or I would say in at least 50% of the questions, you would be given this discounting factor directly in the question itself. Just a 0.909, 0.826. This would be given in the question itself. So can I say our task is just to multiply it with the cash inflows of that respective year? Yes or no? If you are provided, if half of the task is directly done by the question itself, by providing the discounting factor, so can I say our task is just to multiply that discounting factor with the cash inflows of that respective year? Yeah, are you getting this? Is everyone following what I'm trying to say? So see, the presentation or the way to calculate NPV. See, we are in a professional course, right? So our way of solving, our method of solving should also be professional. It should also be very organized way. Okay? So see how it works. So first column will be for year. Year 1, 2, 3. Second column would be for cash inflows. Cash inflows for each year. 50,000, 150, and 175. Third column will be for discounting factor. And fourth column would be for present value of cash inflows. CI is nothing but cash inflows. Okay? From now onwards, I will write everything in short. We will use short abbreviations to save our time. Okay? And discounting factor at 10% since our KO is at 10%. So in many of the questions, they would provide you with this discounting factor. Are you getting this? How many decimals? If there is specifically mentioned in the question that use 4 decimal, then use that. If question just gives up to 2 decimals, then again don't question a question, use up to 2 decimals. But if nothing is given in the question, then I would advise you to calculate up till 4 decimal points. ठीक है? But question में ही 2 decimal तक दिया है. If question has provided till 2 decimals only, then don't try to solve it by taking 4 decimals. Don't question a question in that case. Use 2 decimals. ठीक है? If nothing is mentioned in the question, then I would suggest go up till 4 decimals. So in most of the question, or I would say in many of the question, they would provide this discounting factors. Okay? So you just need to copy paste it and just multiply the cash inflows with the discounting factor. Are you getting this? Is everyone following? If discounting factor is not given in the question, then also we know how to calculate. Yes or no? So for year 1, discounting factor would be 1 divided by 1.1 equal to 0.909 is called as discounting factor for year 1. Similarly, 1.1 divided by 1.1, 2 times equal to 0.826 is the discounting factor for year 2. 175 is the cash inflows, but the discounting factor is 1 divided by 1.1, 3 times equal to 0.751. So can I say my PVCI for year 1 would be 50,000 into 0.909, 45,450. Yes or no? It is just multiplication of cash flows with the discounting factor. For year 2, PVCI is 150 into 0.826, which comes to shits. For year 1, the cash inflow is 50,000. For year 2, 150. For year 3, it was 175. Discounting factor at 10%. It was 0.909, 0.826, 0.751. Present value of cash inflows. It was 45,450. For year 2, it was 150 into 0.826, 123,900. And for year 3, it was 175 into 0.751, 131,425. So can I say my total PVCI comes to how much? Plus 45,450. 300,775. Yes or no? From this, I will subtract present value of cash outflow. My cash outflow in the present case is 2 lakh rupees. Is 2 lakh. So my net present value comes to positive 100,775. And since NPV is positive, we should accept the project. Since NPV is positive, accept the project. Everyone understood the pattern of solving NPV का question, the format to solve NPV का question? Any queries? समझा सबको? Everyone, I am waiting for your response. Okay. Okay, so this is how NPV technique is calculated. Now my question to you, ध्यान से. My question to you: there are two projects. There are two projects that company is evaluating. Project A, Project B. दोनों प्रोजेक्ट का, both the project is having positive NPV. Both the project is having positive NPV. Let's say project A is having positive NPV of 2 lakh, and let's say it is having positive NP of 2.25 lakh. So now my question to you: which project shall we select? Which project shall company go for? Project A or project B? B. B. Why? Because it is having higher NPV, right? But again, this is partially correct. See, if the company has enough funds to take both the projects, then it will obviously take project A and project B, because company is having funds to invest in both the projects. So since both the project is having positive NPV, ideally company should go for both the projects if there are sufficient funds in the company. But if the question says that both the projects are mutually exclusive, listen, pay attention to the word mutually exclusive. Mutually exclusive means you can select only one project from different options. So in that case, company should go for the project that has higher NPV. Okay? See, the NPV technique ka rule is very simple. It is one, there is only one rule of NPV technique. Accept the project if NPV is positive, reject the project if NPV is negative. So NPV technique will say go for both the project. But if both the projects are mutually exclusive of each other, mutually exclusive means you can either select A or B, either or. Mutually exclusive means either or ka concept, either go for A or B. So in that case, we will go for project B because it has higher NPV. Acha, adding a twist to the question, there is project C, which has negative NPV of 50,000. Whether the project is mutually exclusive or not, this will be straightforward rejected because NPV is negative. Are you getting this? NPV technique says if project is having negative NPV, it is straightforward rejected. Is everyone following? Yes, reject C, correct. Acha, adding one more twist. Let's say, adding one more twist to the question. Let's say all the projects, all the three projects had negative NPV. Why is I am not able to? Let's say all the project is having negative NPV. Negative NPV 40,000, negative NPV 1 lakh. Now tell me which project shall we go for? Which project company should select? Tell me what is your opinion? A, reject all. What A? See, again I am repeating, if NPV is negative, straightforward reject the project. मतलब ही नहीं है. It is a loss making project. Reject all. Someone said A. It is not that the project that has lowest negative NPV should be selected. No, it is not that. ABC all the projects should be rejected. Yes, that's correct, because all the projects are having negative NPV. So if project's NPV is negative, straightforward reject. See the decision making criteria of NPV. Focus on this. This is the decision making criteria for NPV technique. If it is positive, accept. If it is negative, reject. Straightforward reject. Okay? Understood? Everyone? Again, for calculating present value of cash inflows, yesterday we learned about some critical points that we need to consider. So that you need to keep in mind always for all the questions, that sunk cost is to be ignored, Allocated expenses is to be ignored unless otherwise specified. Depreciation is a non-cash expense, so it is to be considered just for tax shield purpose. Working capital would be cash outflow in the beginning and inflow at the end of the project. So this all critical points, the crucial points that we discussed yesterday, needs to be considered under NPV technique. Okay. Now I would want you all to solve the example that I provide. Yes, correct. Non-cash expense. I would want you all to calculate NPV for the following illustration. Cash outflow in year zero. Year zero means 0 point. At today's point is 1 lakh, and we need to make additional investment at the end of year two for 50,000. For 50,000. Life of the project is 4 years. Cash inflow per annum is, let's say it is 2 lakh 50 for all the 4 years, 2 lakh 50 each. So it is constant for each year. KO, my discounting rate is 15%. I would want you all to try and calculate NPV for this illustration, net present value technique, but by a proper format, like this table. You need to prepare this table and calculate. Because I want you to explain one thing once you solve this. The question is very simple. Cash inflow per annum is constant at 2,50,000. Cash outflow at today point is 1 lakh. Additional capital required at the end of year two is 50,000. Life is 4 years and discounting rate is 15%. So everyone please try it by yourself. The format to calculate NPV is, first you write the years. It don't see on the screen. Be very honest. You can calculate up to 4 decimals. everyone, PVCI is 713,700. PVCI till PVCI 713,700 correct. आउटफ्लो का अभी तक कुछ नहीं किया. आई हैव डन नथिंग विद द आउटफ्लो. आई विल कम टू दैट पॉइंट. बट PVCI 713,700. Now see, I'm giving you one trick, one easy way to calculate this 713,700. Can you help me in totaling this discounting factor? In totaling this discounting factor, इसका total करो ना. Can you let me know the sum of this discounting factor? 0.8696 plus 0.7561 plus 0.6575 plus 0.5716. It comes to 2.8548, correct? Comes to, yes, 2.8548. That's correct. Okay? And now multiply this 2.8548 with 2,50,000. आंसर यही आना चाहिए. Multiply this 2.8548 with 2,50,000. Answer should come 713,700. So what I wanted to discuss here is, when cash flows per annum are constant, you need not prepare the table. You need not prepare this entire table. आपको यही लेना है, टोटल ऑफ डिस्काउंटिंग फैक्टर लेना है, विच इज कॉल्ड एज PVAF, प्रेजेंट वैल्यू एन्युइटी फैक्टर, and multiply it by the cash inflows per annum figure. Are you getting this? When cash inflows per annum are constant for each year, then you just multiply that cash inflows per annum with present value annuity factor, PVAF. So within a minute you can solve PVCI. You need not prepare this table. Are you getting this? Everyone followed? PVAF. PVAF is present value annuity factor. And how it is calculated? It is just the sum of discounting factors for the years. मुझे ये समझाना था. My purpose to give you illustration, to explain PVAF, and to explain quick way of solving PVCI when cash inflows per annum is constant. Working capital, I didn't say anything about working capital over here. Question में कहा मैंने working capital का कुछ लिखा है. Just I mentioned about cash outflow today and additional cash outflow at the end of year 2. ठीक है? But the purpose to give you this illustration was to explain you PVAF and direct way of solving PVCI when cash inflows per annum are constant. Primary condition to use this direct method is cash inflows per annum should be constant. Only then you can use this method. This should be constant. If this is not constant, then you need to prepare the table. Then you need to prepare the table that we prepared in the previous illustration. But if it is constant, then just take cash inflows per annum multiplied by PVAF factor. And PVAF factor is just the summation or accumulation of discounting factor. Okay? So my PVCI is done. Now my PVCO, calculation of PVCO. Again, format will remain same. Year 1 or year 0 and year 2. Okay? Because cash outflow is happening today and at the end of year 2. So today my cash outflow is 1 lakh. Can I say my discounting factor for year 0 would be 1 only? Yes or no? Worth of 1 lakh today is worth of 1 lakh today only. It will not get reduced. So you don't need to discount year 0 ka cash outflow or cash flow. So my PVCO for year 1 is 1 lakh and year 2 it is 50,000. Friends, you need to take discounting factor for year 2, not for year 1. Don't do mistake over here. So 1 divided by 1.15, 1.15 2 times equal to 0.7561. We need to take discounting factor for year 2 because this cash outflow is happening at the end of year 2 and not at the end of year 1. So my present value comes to 1780, 50,000 into 0.7561, 37,805. 37,805. So my total PVCO comes to 137,805. Therefore, NPV is 713,700 less 137,805 comes to 713,700 minus 137,805, 575,895. This is my NPV. Positive. Everyone understood this? 575,895, correct. So समझा how to calculate PVCI when cash inflows per annum are uneven, they are not constant. So in that case, when the cash inflows per annum is not constant, prepare the table, prepare the chart, prepare the format. But when cash inflows per annum are constant, then simply multiply it by PVF factor and you will get the answer. Okay? Working capital, yes, they will mention specifically that initial investment in the project is 2 lakh and working capital needed is 50,000 or 20,000. They would mention specifically for working capital. And if working capital is mentioned specifically, then don't forget to take it as an inflow at the end of the project because working capital would be released back. Okay? Follow any queries here? Oh, let me save it once. So that it does not get. Okay? Any questions? So this is widely used technique. NPV technique is always preferred above other techniques. So let's say in example, they ask you to calculate using different techniques and they tell you to select the project which is the best one. So in that case, it is possible that as per payback period, it is quite possible that as per payback period, project X could be suggested, but as per NPV, project Y could be suggested. So in that case, we give preference to NPV method. It is widely used method. Your decision generally depends on NPV. Okay? Let's try to solve one illustration from module. So this is the decision making criteria for NPV. If NPV is greater than 0 means positive, accept the project. If NPV is less than 0 means negative, reject the project. And in case of mutually exclusive project, we select the project which has higher NPV. So you can read this line below this table. If the projects are mutually exclusive means either you have to select project A or project B. You cannot select both the projects. So in that case, project which has higher NPV selected. Let's try to solve illustration 3. Compute the net present value for a project with a net investment of 1 lakh. Net investment means cash outflow is 1 lakh, and net cash flows for year 1 is 55,000, for year 2 is 80,000, and for year 3 is 15,000. Further, the company's cost of capital KO is 10%. So discounting rate is given. PVIF at 10% for 3 years are 0.909, 0.826, 0.751. So as I said you, some of the questions would directly give you the discounting factors. PVIF is nothing but the discounting factor. So this question is very simple to calculate. Let's solve it. Illustration 3 from module. Working note 1. Our working note 1 would be calculation of PVCI. Since cash inflows per annum are not constant, we need to prepare the table. Had it been constant, we would just take the sum of discounting factor and multiply it by cash inflows per annum. Column 1 would be here. Column 2, cash inflows. Column 3, discounting factor. Column 4, present value of cash inflows. Year 1, 2, and 3. Year 1, it is 55,000, 80,000 for year 2 and 15,000 for year 3. 55, 80, and 15. They have directly given discounting factor in the question and they have calculated up to 3 decimals. Then you need to take as it is. हमें शाना नहीं बनना है. 0.909. Don't question a question. Life में you should remember this principle. 0.751. So 55,000 multiplied by 0.909. 49,995. 80,000 multiplied by 0.826. 66,080. 15,000 multiplied by 0.75. 15,000 multiplied by 0.751. 11,265. So my total PVCI comes to 66,080 plus 49,995. 127,340 less present value of cash outflow. Cash outflow is happening only once, that is at the start of the project, 1 lakh. Okay, so it comes to 1 lakh, and since it is start of the project, the worth of 1 lakh at the start would be 1 lakh only. So my NPV is 27,340. Since NPV is positive, company should accept the project. समझा सबको? Any queries? बोलो, any doubts in NPV technique? No doubt. Sure. Are you able to digest all these techniques or are we going fast? Sir, table we need to show in working note. Yes, you can show it in working note or you can show it as your final solution as well. Clear? Able to digest? Now, yesterday, someone asked me about, sir, what about opportunity cost? So let's discuss that. See, there are certain crucial pointers that I've already discussed. In addition to that, we have two more crucial aspects that we need to consider. See, as far as financial management is concerned, opportunity cost is always relevant for our calculation. Let me explain you with the help of an example. Currently, I have a land that I am giving on rent at 1 lakh per annum because the land is sitting idle. The land ऐसे ही पड़ा है. It is idle and I have given it on rent for various functions as per the demand. So I am earning 1 lakh per annum. ठीक है. Now company wishes to expand its production. Now the company is planning for expansion, and to expand or to expand the production, it would need a land. So company thought, let's utilize our land. We have our land. Let's utilize this and let's create a structure or a factory on this land. So can I say now company will use this land? Will use this land for its new project? For its new project, correct? So tell me, will the company be able to earn this 1 lakh per annum now? Will the company be able to earn this 1 lakh per annum now? Company has lost this opportunity of earning 1 lakh, and that lost opportunity is called as opportunity cost. And can I say it is relevant for this project? Because had this project not been taken, अगर ये project नहीं लेते, I would have earned this 1 lakh. But because of taking this project, I am losing the opportunity. Yes or no? So this opportunity cost is relevant for the project. This opportunity cost is relevant for the project, and we need to take it as cash outflow. Opportunity cost is always an outflow. Okay? This cost is relevant for the project and it will be treated as cash outflow. Yes, that earnings will be in inflow, but company has lost this opportunity of 1 lakh. Yes or no? So for company, this is a cost. This is opportunity lost cost. That will be an outflow to the company. Understood? Yes, then we are in profit. Then again, we will compare the present value of all the inflows with our present value of cash outflow. But my point here is opportunity cost is relevant for the project. उसके बाद क्या होगा, एनपीवी is positive or negative, I don't know about that. I'm not talking about that. I'm talking about its relevance, its importance for my calculation. ठीक है? Are you getting this? So in NPV or in capital budgeting technique, you just have to ask one question. Is it relevant to my project? Had the project not been taken, ये cost incur होता या नहीं होता? You need to simply ask this question. So here, had the project not been taken, I would have easily earned 1 lakh per annum. But because of taking this project, I'm losing an opportunity of 1 lakh. So that is cost to me. That is opportunity cost to me. Yes, this is not an accounting cost. आपके accounting income statement में ये cost नहीं आएगा. This cost will not be reflected. But as far as financial management is concerned, it is relevant for us. Opportunity cost is always relevant under financial management. Is everyone following? So opportunity cost is always an outflow to the company. So this is the crucial aspect that I need to discuss with you all. Yesterday I purposely didn't discuss this, but someone had asked me this question, so I'm clearing that now. For opportunity cost में कोई query? Any question? Clear. Okay, you asked this yesterday, Kavita. Similarly, likewise, now you all tell me, huh? This is question to you all. Currently, I'm into a manufacturing business and it is labor oriented. ठीक है? Currently, it is all manually, all labor oriented. And I need to incur a labor cost of 5 lakh per annum. Currently, my manufacturing is labor oriented. Everything is manual. Now, through research, we have developed a machine. Through technological advancements, we have developed a machine wherein the entire labor is of no use. Everything machine can do. Whatever task this labor used to do, now everything will machine will do. Okay? Now, all the tasks that labor used to do will be done by machine. So can I say by taking or by buying this machine? See, to buy a machine is a project. To buy a machine is a project. So by taking this project of buying a machine, can I say I'm saving this cost of 5 lakh per annum? Yes or no? There would be saving in this cost. So savings in cost is an inflow as far as investment decision is concerned. ठीक है, जैसे opportunity cost is an outflow, even though actual it is not an outflow. आपके 1 लाख जाने नहीं वाले, but it is an opportunity lost in earning, so it is an outflow. So likewise, savings in cost is an inflow to the company. ठीक है? So by taking the new project of buying a machine, I'm able to save certain cost in the form of labor. So it is an inflow to the company. And as I said, financial management just considers financial perspective. It does not consider emotional or sentiment perspective. Are you getting this? I personally would feel all this labor would lose their job. What will they do? But we are not considering that emotional aspects. We are just considering financial aspects to calculate or to decide whether to accept the project or not. Are you getting this? I would personally not buy machine because it will lose job of many employees, and I would not personally want to do that. But we are not talking about any sentiments or emotions here. We are just talking from money perspective, from finance perspective. Okay? So that savings in cost is an inflow to the company. Clear? Opportunity cost outflow and savings in cost inflow. So you need to consider this while calculating outflow and inflow for NPV. Yes, opportunity cost is always an outflow because you have lost that opportunity to earn something. It is always an outflow. So keep this in mind. Apart from the other crucial aspects that we discussed yesterday, two more aspects that you need to keep in mind while calculating inflows and outflow. That is, opportunity cost is always an outflow. Savings in cost will be an inflow. ठीक है? So हम जो cash inflows का chart बनाएंगे ना, the format that we prepare from sales to cash inflows, in that you have to consider this savings in cost as an inflow. Hope the concept is clear. Shall we move forward in our lives? NPV technique, thorough with the NPV technique. Please respond. Through with NPV technique, everyone? Yes, go ahead. Okay, thank you. Thank you for your permission. Thank you for your response. Now, next technique. Technique number, I'm bad at numbers, but I think it's number 5. Technique number 5. Profitability index. profitability index, or the other name. This technique is also known as ICAI, desirability factor. Desirability factor, PI. Profitability index is denoted by PI. ICAI, aka desirability factor. The formula is very simple. PI index की formula is nothing but PVCI divided by PVCO. NPV technique का formula was PVCI less PVCO. PI का formula is PVCI divided by PVCO. Now what does this mean? Let's calculate profitability index of this illustration. ठीक है? My PVCI was 127,340. It was 127,340, and my PVCO in that same illustration was 1 lakh. So when I say it comes to 1.2734, yes or no? Now what does this 1.2734 mean? I've calculated. See, calculation part is done, but our job is to interpret what we have calculated. Can anyone tell me what this 1.2734 mean? Please try. What does this 1 point greater than 1 accept? Yeah, that is the decision making criteria. You are correct. Decision making criteria is if it is greater than 1 accept, if it is less than 1 reject. That is decision making criteria. Can anyone tell me what does that answer mean? It means on 1 rupee of investment, I am able to generate 1.2734 rupee of present value of inflows. Are you getting this? On 1 rupee of investment, my project is earning 1.2734 rupees, but in present value terms. Correct? The interpretation is on 1 rupee of investment, on 1 rupee of investment, project is earning 1.2734 rupees, and that too in present value terms, not in absolute terms, in relative terms, that too in present value terms. तो जैसे बोलते हैं ना, इक्का दो, इक्का पांच, इक्का 10, so that is always a good sign. So if it is greater than 1, always accept the project. If PI is greater than 1, accept the project. If PI less than 1, reject the project. Are you getting this? So the decision making rule or the decision making criteria for PI index is making criteria for PI index is if PI is greater than 1, accept the project. If PI is less than 1, reject the project. And if PI is exactly equal to 1, then you are free to do anything. If you want to accept, accept. If you want to reject, reject. If it is equal to 1, you are free to choose anything. You are free to decide anything. Likewise, if NPV is 0, or if NPV is PV of CI is just equal to PV of CO, if NPV is 0, then you are free to do anything. You either accept or reject. It doesn't matter. And PI, this technique will be used under capital rationing situations. This technique will be used for decision making under capital rationing situation. I know सबके mind में ये question आ रहा है कि what is capital rationing. We will see this concept in our next session. But right now you just need to remember that PI index will be used for decision making under capital rationing situation. What is capital rationing? We will see in our next session. As of now, you forget that, but you just remember it will be used for decision making. PI will be used for decision making under capital rationing situation. Okay? Any queries for profitability index or desirability factor? See, the variables are same for NPV and PI. The variables are PVCI and PVCO. The difference is under NPV we subtract PVCO, and under PI we divide PVCO. बस इतना ही फर्क है, इतना ही डिफरेंस है. अंडरस्टूड? सो बातों बातों में अक्का इज ऑल्सो नोन एज name. It is the name, other name. It is widely used term in our normal life also. It is, this term is not financial management ka term. It is widely used term in our normal life as well. Also known as. Yes, correct. Thank you, Shatakshi. Leaving us like at a turning point in the web series to make our क्या आपने मेरे लिए अच्छी बात बोली कि बुरी बात बोली? आई एम नॉट एबल टू अंडरस्टैंड दैट, बट अच्छी बात ही होगी. आई एम वेरी अ पॉजिटिव पर्सन, सो आई एम टेकिंग इट पॉजिटिवली. ऐसे होता है ना कभी कभी बातों बातों में, यू से एनीथिंग एंड सामने वाले को पता नहीं चलता व्हाट द पर्सन सेड. ठीक है, लेट्स ट्राई टू सॉल्व इलस्ट्रेशन नंबर 4. ओके. ABC Limited is a small company that is currently analyzing capital expenditure proposals for purchasing of equipment. For purchase of equipment. The company uses NPV technique to evaluate project. See, question as specifically said, use NPV technique for decision making. The budget is 5 lakh, which ABC Limited believes it is the maximum capital that it can raise. The initial investment and the projected net cash flows for each project are shown below. The cost of capital of ABC Limited is 12%. Discounting rate is 12%. You are required to compute NPV of the different projects. What we need to calculate here? NPV for different projects. So they have given initial investment, and initial investment, unless otherwise specified, will always be at the beginning of the year, at the start of the year, at 0 point. Project cash inflows for each project is given. Okay, and we need to calculate NPV. Discounting factor is not given. In absence of discounting factor in the question, any which ways we know how to calculate that. So let's solve. One divided by 1.12. Yes. 12%. What is this 12%? KO is 12%. Yes. Discounting rate is 12%. Illustration 4. We need to calculate NPV for all the projects. So I will help you to calculate NPV for project A and B, and I would want you all to try for project C and D. ठीक है, पहले हम A और B का करते हैं. So here it would be, here this is for project A, this is for project B, and likewise for project C and D. Cash inflows. See, now I will just write in short terminology. Cash inflows is denoted by CI. Discounting factor is denoted by DF. Discounting factor at 12%. and present value is denoted by PVCI. Likewise, for project B, cash inflows, discounting factor, and PVCI. Total, the life of the project is 4 years. Cash inflow for project A is, see, the cash inflow for project A is 50,000. And sorry, the life is 5 years. Huh? The life is 5 years. And the cash inflows per annum are constant. So we can directly multiply it by PVAF. It is constant at 50,000. So no need to prepare entire table. Multiply it by PVAF. And how to calculate PVAF? It is nothing but summation of cumulation of discounting factor. So calcipelo 1 divided by 1.12 equal to M plus, again equal to M plus, again equal to M plus, fourth time equal to M plus, fifth time equal to M plus, and then MRC. कितना आया? What is the PVAF for 12% for 5 years? 3.6047. Correct. So since the cash inflows per annum are constant, we will directly multiply it by PVAF 3.6047, and my PVCI comes to 3.6047 multiplied by 50,000, 18235. So no need to prepare the table since cash inflows per annum are constant. Now for project B, मैंने इसलिए project A लिया था so that my calculation is very quick. आपको करना पड़ेगा for project C and D. For project B, it is 40, 50, 70, 75, 75. The cash inflows are 40, 50, 70, 75, 75. Since cash inflows per annum are not constant here, we need to prepare the table. 0.8929. 0.7972. 0.7118. 0.7118. 0.6355. 0.5674. So my total PVCI comes to, due to constraint of space, I am not writing PVCI individually, but I will just write the total amount. 0.8289. 33,156. 33,156. 50,000 into 0.7972. 70,000 into 0.7118 plus 75,000 into 0.6355 M plus 75,000 into 0.5674 equal to M plus MRC 213060. Project B का PVCI is 213060. मेरा 213 आया, so I have done some mistake in calculation. Let me check again. 40,000 divided by 1.12 equal to M plus 50,000 divided by 1.12 equal to M plus 70,000 divided by 1.12 equal to E. M plus 75,000 divided by 1.12. M plus 75,000 divided by 12. 215,619.46. 215,619.46. 215,619.46. This is my PVCI for project B. So can I say for PVCI for NPV for project A is 180,235. 180,235 less initial investment of project A is 2 lakhs. So my NPV is negative 19,765 for project B. My PVCI less PVCO. My PVCI is 215,619.46. 215,619.46 less PVCO for project 2 is 190. 1,90,000. So it comes to 25 positive 25,619.46. Likewise, you need to solve it for project C and project D. Please be honest in solving. Don't see the solution. It is for your practice. I will help you in calculating PVCO for project C and D. ठीक है, वो मैं help कर देता हूँ. It is 250 and for project D is 2110. So half part I have already solved for you. You just need to solve PVCI now. In the solution, they have taken up till 3 decimals. So there would be certain rounding of errors. So that's fine. Chota mota difference is fine. You can say keep the change. Project C 27025 negative. Chitkalam 27035. Okay. Yes, that's correct. 27035. But it is positive, not negative. Huh? Positive 27035. Okay, okay. So, oh, that is dash. I thought that is negative sign. 26045. How much decimals you took, Tambeshwari? I think you need to recalculate it again. It should be 27045. Yeah, negative. For project D, it is negative 37, roughly around 3750. You can check with the institute's answer. Since they have taken up to 3 decimals, there would be certain rounding of error. So that's fine. So small difference is accepted. It is 27,035 positive. And here it is minus 37. 37, roughly around 3750. Okay. So this is the NPV for each of the projects. We have calculated NPV for each of the projects. Our task does not end here. We need to make a decision. Can I say project A and D is outrightly rejected because NPV is negative? Yes or no? It is outrightly negative, rejected because NPV is negative. Now option left is for project B and project C. Since both the projects have positive NPV, we should take both the projects if we have sufficient funds. See, to undertake project B, we would need 190, and to undertake project C, we would need 250. So can I say total we would just need 4,40,000, and the budget of the company is 5 lakh. So we can take both the projects. We can take both the projects simultaneously. Yeah, had the question said that the projects are mutually exclusive, then in that case, we would select the project with highest NPV. Then in that case, our answer would be project C. Had they asked about mutually exclusive scenario, in that case, okay? If the question specifically says that projects are mutually exclusive, so mutually exclusive means either or. You need to just select one. In that case, we would select project C. Yes. So understood with NPV technique? A yes or yes? I don't want to hear no from you all. I just want to hear yes. Yes. Good. So बातों में technique number 5 also done. Now let's move to technique number 6. Let's move to technique number 6, which is internal rate of return, IRR. पहले तो let's understand what is the meaning of IRR. See, IRR is the discounting rate. Listen it very, very, very carefully. Yeah? IRR is that discounting rate where NPV of the project is 0. Again, I am repeating. It is discounting rate. It is discounting rate where NPV of the project is nil or 0. Is nil. See, IRR is all about rate. It is all about rate. So we are talking about discounting rate where NPV of the project is nil. Means in other words, can I say IRR is that discounting rate where PVCI is equal to PVCO? Can I interpret like this? It is that discounting rate where my PVCI will be equal to PVCO. If my PVCI is 1 lakh and if my PVCO is also 1 lakh, can I say my NPV will be 0? Yes or no? सो ये सिर्फ बातों को घुमाया मैंने. IRR is that rate where NPV is zero. Means in other words, it is that rate where your PVCI will be equal to PVCO. And under IRR technique, we need to find the discounting rate because it is all about the rate of return. They are talking about the rate of return. So we need to calculate the discounting rate where PVCI is equal to PVCO. Are you understanding this? Yeah, are you getting this? It is the discounting rate where your present value of inflows is equal to present value of outflows. Or in other words, your NPV is zero. Since IRR is about rate of return, here under this technique, we need to calculate that rate, that discounting rate. So how to calculate that discounting rate? We will use permutation combination. We will use trial and error method. First, we will calculate NPV, let's say 10%. If NPV comes positive, that means this is not an IRR because IRR is that rate where NPV is zero. So if at 10% NPV is positive, 10% is not your IRR. So this is trial one. Then next trial, try it at 15%. Likewise, try at different rates. And you need to find that rate where NPV is zero. So IRR, in short, is calculated using trial and error method. We need to try it at different rates and calculate NPV. And the rate where NPV is zero, that is our IRR. ठीक है? हमें क्या करना है? ट्रायल एंड एरर करना है. And we need to find that rate through our trial and error method where NPV is zero. Understood? And to understand IRR, it is the maximum earning capacity of the project. IRR means the maximum earning capacity of the project. Are you getting this? IRR means the maximum project की भी एक कैपेसिटी होती है ना. Project also has some capacity. So how much rate of return that project can maximum generate is IRR. So let's say project is able to maximum generate 15%. So that this 15% will be your IRR. This is the maximum earning capacity. बस project की capacity इतनी है. जैसे every human has its own capacity to run, to jog, or to do anything. Likewise, project also has its earning capacity. So this is the maximum earning capacity of the project. Let's say it is 15%. And if I say your desired rate from the project, your wish from the project, or the desired rate or the industry rate is 25%, tell me, will you accept the project or not? What shall be your decision? The project ki maximum earning capacity is 15%, but the industry rate is 25%. Industry rate is 25%. What shall be your decision? Shall we accept the project or reject? Not acceptable. Yes, because I want something more, but that project has not the capacity to earn more. So I need to reject the project. Yes, correct. So IRR, you need to interpret IRR as the maximum earning capacity that project holds. Maximum project can generate how much? That is IRR. And that you need to compare it with your discounting rate, with your expected rate, with your industry rate. Okay? Are you getting this? Or if nothing is provided in the question, then compare it with KO. Okay? So the decision making criteria for IRR, जैसे हमने NPV, we saw for NPV, we saw for PI. Likewise, we will see for IRR. The decision rule for IRR is if IRR is greater than your expected rate of return or the industry rate or KO except the project, because project is having more earning capacity than your expectation. You need to interpret like this. Likewise, if IRR is less than your expected rate of return, is less than your desired rate of return, or it is less than your industry rate, or it is less than your KO, then it is to be rejected. Understood? IRR is the maximum earning capacity. A NPV 0 means, let's say at 15% NPV comes 0. Okay? Now if if your discounting rate is 20%, your wish is 20%, obviously your NPV will come into negative, because higher the discounting rate, lower will be the present value. Are you getting this? Since, see, in my example IRR is 15%, okay? So in that case NPV is 0, means no profit no loss situation. No profit no loss situation. Now you are expecting the from the project at 20%. So can I say NPV will fall because you have increased the rate? A logic of maths, higher the discounting rate, lower will be the present value. So can I say the NPV will result into negative? So ये हुआ ना, उसका मतलब कि 15% is the maximum earning capacity, because at 15% you are at no profit no loss. Yeah, are you following? At 15% you are at no profit no loss. NPV is 0. If you increase that rate, if your expectation is beyond that rate, now NPV will fall, because higher the discounting rate, lower will be the present value. Okay, understood now? Yeah. Yes, you need to ask if you are unclear. NPV 0 means no profit no loss. So beyond that rate, now you will be in a loss making situation. So that's why it is called as maximum earning capacity of the project. Okay. Now how to calculate IRR, we will see through an example. मैंने बोला to calculate IRR we need to use trial and error method. Which method? Trial and error method. And this trial and error method uses the concept of interpolation only. We'll use the concept of interpolation that we saw yesterday while solving payback period. But let's take one example, let's take one illustration for better clarity. You need to study this theory. Profitability index, I discussed with you all. If PI is greater than 1, accept. If PI is less than 1, reject the proposal. Okay? So illustration number 5 on page number 7.31 is your homework for today. You can practice at home, and you need to read the theory part as well. Now let's come to IRR technique. IRR technique, first we will solve it by using a logic, by interpolation ka logic, and then I will derive a formula from that logic. ठीक है? आपको यहाँ पे जो formula दिख रही है on page 7.33, which is very confusing as far as current situation is concerned. We are not able to understand anything from this formula right now at this point. But once we understand through this logic, this formula will be a very easy for you. Okay, let's take an example and calculate IRR. Illustration number 7. Calculate the internal rate of return of an investment of 136. So 1,36,000 is your cash outflow. Cash inflows for all the 5 years are given. You need to calculate IRR. IRR means that discounting rate where NPV is 0. Okay? So as I said, we need to calculate IRR using trial and error method. So always start your IRR, or always I would suggest, in absence of any information given in the question, your trial one should always start with 10% because that is our favorite rate. Trial one, calculation of NPV at 10% discounting rate. Now we need to check at 10% whether my NPV is zero or whether it is positive or whether it is negative. Okay? And now we are expert in solving NPV. We know how to calculate that. Discounting factor and PVCI. 30, 40, 60, 30, 20. 30, 40, 60, 30, 20. ठीक है? First, now our trial one is discounting rate at 10%. This is our first trial. Let's calculate PVCI. Let's calculate PVCI. See, this discounting factors, you can write it at home. Okay? As of now, we are understanding the concept, so we will directly calculate PVCI. 30,000 divided by 1.1 equal to M plus 40,000 divided by 1.1 equal to M plus 60,000 divided by 1.1 3 times equal to M plus 30,000 divided by 1.1 4 times equal to M plus 20,000 divided by 1.1 5 times equal to 138,318. 138. My PVCI comes to 138,318. You can complete this table at home, huh? So this is my PVCI less PVCO. PVCO is how much? 1,36,000. Yes or no? So can I say my NPV comes to positive 2318? Yes or no? So when I say this 10% cannot be my IRR, because IRR is that rate where NPV should be zero. But at 10%, if I calculate NPV, it comes to positive 2318. Okay? Understood till here? This 10% cannot be my IRR because NPV is positive. So our next trial, since we have to come to zero, that means we need to fall this NPV. So to bring down the NPV, higher should be the discounting rate, because at higher discounting rate, your present value will be less. Okay? Are you getting this? So your trial 2 should be higher than 10% car rate. Are you getting this? Because we need to bring down this NPV to zero from 2318. We need to bring it down to zero from 2318. So to bring down the present value, discounting rate should be increased because they both are inversely proportional. Higher the discounting rate, lower would be the present value. So our next trial should always be higher than 10%. Okay? Trial 2. And I would suggest take a gap of 5%. So trial 2, calculate a calculation of NPV at 15%. I would suggest take a gap of 5%. Yes, take 15%, correct. Again, let's calculate NPV. Here, CI discounting factor at now at 15% and PVCI. Here 1, 2, 3, 4 and 5. Present value is 30,000. 40,000, 60,000, 30,000 and 20,000. My PVCI comes to discounting rate at 15%. 30,000 divided by 1.15 M plus 40,000 divided by 1.15, 2 times equal to 2 M plus 60,000 divided by 1.15, 3 times equal to 1, 2, 3 M plus 30,000 divided by 1.15, 2, 3, 4 times equal to M plus, and 20,000 divided by 1.15, 2, 3, 4, 5 M plus MRC 122,879.81, 122,879.81. Their trial 2 is at they have done trial 2 at 12%, but no worries, we can try it at 15% because it is advisable to take a gap of 5% less PVCO of 136. So can I say now my NPV is, now it is coming in negative. How much? Minus 136. 13,120. Yes or no? Please check whether I have calculated this correctly or not. Please check PVCI at 15%. Is this correct or not? Because my calci has some deficiencies. It is correct, right? Okay. Correct. Okay. Okay. So NPV is negative. So is this 15% my IRR? Yeah, obviously not, because NPV is negative over 13,120. So NPV, so my IRR cannot be 15% because NPV should be 0 for IRR. But at least I can draw a conclusion that NPV would lie somewhere between 10% and 15%. How did I conclude this? See, when my discounting rate was 10%, my NPV was positive 2318. Okay? When I increase this rate from 10% to 15%, my NPV drastically fell down to 13,120. Correct? यहाँ तक any query? यहाँ तक any query? When I increase this rate by 5%, when my discounting rate was 10%, my NPV was positive 2318. Okay? When I increase this rate by 5% and when I took the discounting rate to 15%, my NPV drastically fell by how much? बोलो कितना? Can I say 13,120 plus 2318? 15,438 से गिरा by 15,438. Yes or no? See, 2318 positive. So positive से पहले 0 तक fall होगा and then till negative 13,120. Did you understand how this 14,438 came? पहले positive 2318 से 0 and then from 2318 to negative 13,120. So by increasing the rate by 5%, my NPV fell by 15,438. ठीक है? But I want to reach at this point at 0. I just want to fall my NPV by 2318 so that it reaches to 0. So by how much percent I should increase the rate? That is your IRR. Are you getting this? If I increase the rate by 5%, my NPV fell by 15,438. बट मुझे 15,438 से नहीं गिराना है. I just want it to fall it by 2,318. So by how much percent I need to increase? By how much percent my discounting rate should be increased? So as I said, use interpolation. So using interpolation technique, if I increased my discounting rate by 5%, my NPV fell by 15,438. But I just want it to fall it by 2,318 so that it reaches to zero. So by how much percent I should increase this rate? Bolo, cross multiplication. 2,318 into 5 divided by 15,438. You need to increase it by 0.75. 0.75 आया सबका. 0.75. Out this 0.75 came, it is just by cross multiplication. 2,318 multiply by 5 divide by 15,438. ठीक है. So I just need to increase it by 0.75%. Are you following, everyone? We are using the interpolation technique. 5% बढ़ाने से, by increasing the discounting rate by 5%, my NPV drastically fell by 15,438. But I'm not concerned with that amount. I just want it to fall it by 2,318. So proportionately, I would need to increase the rate. Therefore, my IRR will be 10 plus 0.75. You just increase the rate by 0.75. So at 10.75%, approximately your NPV would be 0. So देखो आया solution में भी 10.7%. So approximately, since they have used 3 decimals, there is a minor difference between our calculation and their calculation, and also their gap is very less. Their trial 2 is at 12%. So less the gap, more accurate would be the result. Our gap is little huge, from 10 to 15. We have taken a gap of 5%, whereas here in the solution, they have taken a gap of 2%. So there would be certain small difference in the answer, but it is approximately same. So when you calculate NPV at 10.75%, it would be nearly to zero or exact zero. Okay? Everyone understood IRR technique? I will explain the formula now. First, I want you to understand the logic, because formula is always devised from logic. Sai Kiran has some question. What is your question, Sai Kiran? Do the calculation on negative side to get 425. Sorry, what is this 4,25? I didn't get. What is this 425? I am not understanding that. The logic is this. Logic is interpolation. Now from this interpolation technique, we can devise a formula. And the formula of IRR is IRR is equal to lower rate plus NPV at lower rate divided by NPV at lower rate minus NPV at higher rate multiply by higher rate. यार स्पेस कम पड़ गया. Multiply by higher rate less lower rate. See, if I had told you this formula earlier, कुछ नहीं समझता. But अब देखो, इस formula से let's solve that. Lower rate between 10 and 15, which is the lower rate? It is obviously 10. Yes or no? Plus, what is my NPV at lower rate? Lower rate is 10. Huh? Lower rate is 10% over here. 10%. In our case, lower rate is 10 and higher rate is 15. ठीक है? NPV at lower rate. What was your NPV at 10%? Can I say it was positive 2318? The whole divided by NPV at lower rate 2318 minus NPV at higher rate. Higher rate was 15%. Our NPV at 15% is negative 13120. So can I say my NPV at higher rate is, यहाँ ध्यान देना, negative 13120. ठीक है? Just don't write 13120 in absolute number. It is negative 13120. Multiply by higher rate is 15% and lower rate is 10%. Let's calculate now. So is equal to 10 plus 2318 divided by 2318 minus means it will be plus 15438. 2318 divided by 15438 multiply by 5. ठीक है? तो वही आया 10. So ब्रैकेट का आंसर comes to 0.75. 2318 divided by 14438 multiply by 5. So 10 plus 0.75, which comes to 10.75%. So if I had just given you the formula directly, you would not understand anything. You would not understand the logic of IRR. The logic is this interpolation. And from this logic, we have devised this formula. Understood? So don't directly go for formula. Go behind the logic of that formula for clarity. Everyone understood? Yes, it's the same thing. So the formula of IRR, now onwards, just to make our calculation easy, we will just remember this formula and solve IRR. If you want to solve it by interpolation, then also it is correct. Okay? But if you want to solve it by formula, then also it is correct. Both will give the same answer. So the formula is lower rate plus NPV at lower rate divided by NPV at lower rate minus NPV at higher rate. The whole multiply by higher rate minus lower rate. ठीक है? So वही फॉर्मूला यहाँ पे लिखी है उन्होंने. देखो, LR is lower rate plus NPV at LR means lower rate.
Sir, sorry for the disturbance.
Sorry?
Sir, sorry for the disturbance.
Where is the disturbance?
No, I am telling, sir. I am interfering in between. I am telling you. Sai Kiran.
You are not able to listen?
No, sir. I am asking you query. For that purpose, I am requesting you. I am disturbing you. I am telling, sir.
Okay.
Hello.
Yeah.
I am asking you some clarification. For that,
Yes.
please allow
ask.
me for disturbance. I am asking.
Yes. Okay. Yes, please ask.
Sir, what is my query is you have done for 10 plus 0.075, 10 plus 0.75.
Yes.
I am asking you do it from the reverse side, 15 minus 4.25. That also, you please do it. I am asking you, sir.
Yeah, that is also correct way. See,
Please do it. I am asking, sir. Please do it. I am asking.
So you want me to calculate reverse?
From 15 side, sir. From 15
Okay.
side. Now you have done from 10 side. You do it from 15 side. I am asking.
Okay, I will solve it that for you. But I just want to ask from my side, like, why do you want to do it from reverse side just for
Because
my
we don't know na,
clarification.
from where we have to do, we don't know na. We want to know both sides calculation.
Okay. Okay. So because you can
Thank
get
you, sir.
answer from positive side as well, but yes, for you I will calculate
No,
doing
you'll get
from
it, but
negative
we
side.
want to know how to do it. We want
Yeah,
to
yeah,
know
it
how
is
to do
one
it.
and the same thing. Okay, I will just solve. So at 15%, my NPV was negative 13,120. ठीक है? Okay. At 15%, my NPV was 13,120. At 10%, my NPV became positive 2318. Okay. The logic remains still same. Now I am decreasing the rate. By decreasing the rate by 5%, my NPV increased by 15,438. Yes or no? From negative 13,120 till to positive 2318. So can I say my NPV in this case increased by 4318? I just want to increase by NPV by 13,120 only so that I can reach at 0 point. I just want to increase my NPV at 13,120. So by how much percent I need to decrease this discounting rate? Okay, let's solve that. So by again by interpolation, by just a second. By decreasing the rate by 5%, my NPV increased by 15,438. I just want to increase it by 13,420 so that I can reach to 0 point because I want NPV at 0. By how much percent I should decrease the rate? This is what interpolation says. So again cross multiply 13,420 multiply by 5 divided by 15,438. ठीक है 13,420 multiply by 5 divided by 15,438. So it comes to, so you need to fall it by 4.35%. So can I say my IRR in this case would be 15 minus 4.35? 15 minus 4.35. So it comes to around roughly around 10.65, 10.75 only. Yes or no? So answer is one and the same only. 4.24. Okay. So there would be some deficiency. As I said, there is some deficiency in my calci. So 13,420 into 5 divided by 15,438. Yeah, it is 4.25. Answer is 4.25. So exactly it comes to 10.75. 4.25. So exactly it comes to 10.75. So again the
Okay,
answer is
thank you,
same.
sir. Thank you,
Understood?
sir. Yes, sir. Yes, sir. Just to know both sides, how
Yes,
to
yes, yes.
do.
Yes, yes. You just focus. We just need to focus on the logic. But if we focus on
We want to
logic,
know both sides, sir. I want to
yes,
know
yes,
both
yes,
sides
yes,
how to do
yes,
it.
yes, yes. I'm saying for both the sides, the logic remains same. I'm saying that
Okay. Okay, okay.
the logic would remain same. Understood, everyone? The logic is interpolation, but from that interpolation, we devised a formula so that our calculation becomes very quick and easy. So this is all about IRR technique. So again, just to quickly recap IRR. First of all, IRR is the discounting rate where NPV is nil, zero. NPV is nil means present value of CI should be equal to present value of CO. Okay? And IRR is interpreted as the maximum earning capacity of the project. Means in this case, in illustration 7, our maximum earning capacity of the project is 10.75%. Now we need to compare this 10.75% with our expected rate of return or with our KO or with our desired rate. So if you are desiring more than 10.75%, then you need to reject this project because the maximum earning capacity of this project is 10.75. Are you getting this? So if your desired rate of return, or if your KO, let's say your cost is only 15%, then outrightly this project gets rejected, because at 10.75 only you will be at no profit, no loss. So in no case it will able to earn you more than 10.75%. Correct? So this is how you calculate using different techniques, and you interpret and you decide, you make decision with the help of such calculations. Let's solve illustration 8. Let's solve that. Let's try to solve that. A company proposes to install a machine involving a cost of 3,60,000. So this 3,60,000 is my outflow. It is my initial investment. The life of the machine is 5 years, and its salvage value of at the end of the life is nil. So my scrap value is nil. The machine will produce net operating income after depreciation of 68,000 per annum. See, till now, all the question used to give us information on cash inflows directly. All the questions that we have solved currently, the information was directly for the cash inflows. But here, they have not given cash inflows. Friends, understand this. They have not given cash inflows. They have given information on income. Which income? On net operating income after depreciation. Remember the format. Remember the format. NPBDT. This is NPBDT less depreciation. This is NPBT. Correct? Can I say this is net operating income before depreciation? NPBDT is nothing but net operating income before depreciation. And can I say this NPBT is nothing but net operating income after depreciation? Yes or no? After depreciation. So in the current illustration, they have given the information starting from NPBT and not from cash inflows. So our first task is to reach from NPBT to cash inflows. Okay, first task is this, because the information is not for cash inflows, it is from for operating income, it is for income. And as far as capital budgeting is concerned, we are not interested in income, we are interested in cash inflows. So when I say my format would be NPBT less tax, this will give me NPAT, and after that, since depreciation is a non-cash expense, I will add that. Correct? See friends, understood till here? This is very important in this illustration. You must understand from where the information is given, from where the income statement needs to be started. Okay? So here they have specifically mentioned net operating income after depreciation. So indirectly they are talking about NPBT. And how much is my NPBT? It is 3,60,000. My tax rate is at 45%. So tax at 45%. 360 into 45%. 162. My NPAT comes to 198. Now, does the question give information on depreciation directly? Have they given the in 168? It is just 68. Net operating income is just 6. 360 is my cost of the project. It is not my NPBT. Sorry, I did an error. 360 is my outflow. My NPBT is 68,000. Net operating income is 68,000. 68,000 का 45%. 30,600. My NPAT comes to 68 minus 3,600. 37,400. ठीक है. Now they have mentioned nothing about depreciation directly. Directly they have not given us depreciation ka figure, but indirectly we can calculate. In absence of information on the method of depreciation, it is always assumed to be SLM. And SLM depreciation, we know it is original cost less salvage, which is zero in this case, divided by life. So my depreciation comes to 72. So can I say I need to add this depreciation of 72,000? So my cash inflow will be 109,400. Understood, everyone? This is the first time in the question where cash inflow is not directly given, but they have given information on other variables of income statement. Everyone understood this? Yes, 72,000, correct. In absence of information, depreciation is always on SLM. And SLM formula we know, original cost minus salvage divided by life. So my cash inflows per annum is 109,400. Okay, so this is my cash inflow per annum. They have not mentioned that this 60, see, they have specifically mentioned in the question that 68,000 is per annum, means 68,000 for year 1, 68,000 for year 2, 68,000 for year 3, 68,000 for year 4, 68,000 for year 5. So can I say this is now a constant stream of cash inflows per annum? Yes or no? This is now a constant stream of cash inflows per annum. So for year 1 also it is 109,400. For year 5 also it is 109,400. So can I say we can directly use PVF and calculate NPV? We can directly use that. And see friends, in the question also they have given PVF factor. See, when discounting rate is 14%, the cumulative factor is 3.43. Cumulative factor means annuity, PVAF. Cumulative is nothing but summation. They have also given, the question has also directly given the PVF factor. So cash inflows per annum has to be constant. Understood? So now in this question, they have asked us to calculate IRR. ठीक है, यही पूछा है. And to calculate IRR, we know we have to use trial and error method. ठीक है. Now here our trial one will not start at 10% because question has not mentioned anything about 10%. They have directly given from 14%. So use some hints that question gives. So start from 14%. Trial one. Trial one is calculation of NPV at 14%. This is the hint that question directly gives. It is somewhere between 14 to 18%. See, they have given discounting rate from 14 to 18. So IRR has to fall between these rates. It is sure now. Otherwise, question would not give these rates to you. Okay? So trial one at 14%. My PVCI will be, my cash inflows per annum are 109,400 will be 109,400 multiply by PVAF factor at 14% for 5 years, and that is given in the question. 109,400 multiplied by 3.43. So my PVCI comes to 375 242. Yes or no? And if I subtract with PVCO, which is 3,60,000. So can I say my NPV at 14% is positive? It is positive 15,242. Everyone understood till here? You don't need to prepare table here because cash inflows per annum are constant. Just directly multiply it by PVAF. So trial one, 14% gives positive NPV. So 14% is not my IRR. This is now final. Now we need to fall this IRR because we need to bring this down to zero. So use some higher rate. Let's take a gap of 2% in this question. Let's take a gap of 2. Let's not take a gap of 5, but let's take a gap of 2. You are free to take a gap of 1% also. You are free to take trial to at 15%. That's also fine. But I am taking a gap of 2. Trial 2. Calculation of NPV at 16%. Again, PVCI will be 109,400 multiplied by PVAF factor. At 16%, it is 3.27. So my PVCI comes to 109,400 into 3.27. 357, 738 less PVCO of 360. So can I say at 16%? NPV at 16%, it comes to negative 2262. Any queries still here? So now it is sure that an IRR is somewhere between 14 and 16 because 14 it was on positive side, but if we take at 16 now it goes to negative side. So NPV lies between 14 and 16. Now it is sure. Clear all? Okay. Thank you. So now again, since now we remember the formula, we will calculate IRR using the formula itself. And if you don't remember the formula, then always use logic. If you don't remember the formula, then always use logic. But I remember the formula, so I will use formula. IRR is lower rate plus NPV at lower rate divided by NPV at lower rate minus NPV at higher rate, the whole multiply by higher rate minus lower rate. ठीक है? Lower rate in our trial it is 14%. NPV at 14% was positive 15,242. Was positive 15,242. NPV at lower rate again positive 242 minus NPV at higher rate. Hey yaar, this is very frustrating. I lost that. Oh, NPV first trial was at 14%. ठीक है, lower rate plus NPV at lower rate divided by NPV at lower rate minus NPV at higher rate multiply by higher rate minus lower rate. So I know my lower rate was 14%. NPV at lower rate was how much? Do you all remember, friends? आपको याद है? 15242. Thank you very much. 15242. NPV at lower rate 15242 less NPV at higher rate was, I guess, negative 2262. Yes, correct? Am I correct? 2262. Perfect. Thanks. My task is easy now. And higher rate is 16 minus 14. Okay. So let's solve the bracket inside. 14 plus. See, friends, students generally do mistake over here at this point. At this point, they do mistake. They ignore this negative sign. They just mention 2262, which is incorrect. NPV at higher rate is negative, so you need to write the minus sign. So please be careful over here. 15242 plus 2262 to 2. Answer of bracket is 1.74. If we solve the bracket inside, it comes to 1.74. So my IRR is somewhere around 15.74%. Means if you try to solve NPV or if you try to calculate NPV at 15.74%, your NPV would nearly be zero. See, exact. Can you see the solution? Exact 15.74. Understood IRR technique? Yeah, because the gap between your two trial is very huge. The accuracy will not be close. Okay, so that is also correct. 15.86 is also correct. Since the gap between the two discounting rate is very high, it will not give more accurate result. Lower the gap between the two rate, higher would be the accuracy. Lower the gap between two rate, higher would be the accuracy. Gaps कैसे find करें? It depends on the hints in the question. Here the question has directly given. Here the question has given us certain discounting rate 14, 15, 16, 17, 18. So obviously इतना तो logic है कि IRR would lie somewhere between 14 and 18. So that is very common sense. So now your trial one has to be started from 14%, or it should start from 14% because question has given you the hint. Next trial can be at 15%. Next and third trial can be at 16%. So you are free to use any trial. Someone may take trial one at 14, someone may take trial two at 70. That's absolutely fine. But in absence of this table given in the question, I would suggest use a gap of 5%. The gap should be 5%. In absence of any information or any hints given by the question. In that case, you can take a gap of 5%. Two gaps. Which two gaps I said? Which two gaps you are talking about? You are free to use any gap, but the question will give you some hints. Here it is giving the hint that IRR is from 14 to 18%. So your trial one has to be at 14%. Your trial two can be at 15, can be at 16, can be at 17, can be at 18. But it cannot go beyond 18 because Question has not provided the PVF factor beyond 18%. Okay, understood IRR technique? Any questions? So in today's session, we completed, I guess, ARR technique, accounting rate of return, which focuses on accounting profit rather than cash inflows. Then we saw net present value technique in detail. We also saw other two crucial aspects that we need to consider while calculating cash inflows and outflows. That two crucial aspects were about opportunity cost and were about savings in cost. Okay. Then we saw profitability index, which is also known as desirability factor. Desirability factor is 1 rupee of investment is generating how much rupee of cash inflows, but in present value terms. And then lastly, we saw about IRR technique. IRR is the discounting rate where your NPV is zero, or in other words, where PVCI is equal to PVCO, and it denotes the maximum earning capacity of the project. In next session, we will understand the last technique, that is modified IRR, and we will also see certain special issues under capital budgeting technique. We will also see capital rationing situation that I just introduced to you. I just introduced the name with you. Okay. Maximum earning capacity of the project. See, at IRR, NPV is zero, means no profit, no loss situation, means break even. So break even is what? Maximum earning capacity. Now, if you increase the rate beyond break even, your NPV would be negative, means your NPV would be in a loss situation. That's why it is called as maximum earning capacity. Maximum earning capacity is nothing but break even. Because if you increase the rate beyond break even, now NPV will fall, means you will go under loss situation. So that's why it is also understood as maximum earning capacity that project holds. Any queries? Yeah, thank you, Pallavi. Thank you for your kind comments. Students, any query for today's session? Sit column. How they are seeing 3.29 in page number 7.37. 7.37. What is 3.29? See, you just forget. See, there are different ways to calculate. You just keep in mind the way that I have taught you. See 5, to get answer 5, there are different ways. Either you do 1 plus 4, either you do 2 plus 3, or either you do 7 minus 2. Everything is correct. You just need to choose any one method. So just go by the easiest method or just follow the logical method. Okay? Don't try to understand all the methods. If you try to understand each and every method, then you will not able to find the correct solution. This is my personal experience. Don't try to learn all the methods. Try to learn the best method, or try to learn the easiest method, or try to learn the logical method. You just see the last answer. You just see the final answer. Final answer is 15.74 in that case. The solution that they have done here, for that you need the present value table. So don't see or don't try to understand this method as of now. Just follow the method that I have explained it. Okay? Otherwise you will be in confusion. Okay,
Good
thank
evening,
you
sir.
Hardik for your comments. Yeah, yes, Bhavna.
Sir, interpolation technique repeat कर दो sir.
What interpolation? You want to understand interpolation technique?
Yes sir.
Oh, okay. I think you should ask this question when we were solving interpolation. Let me get back to illustration. Yeah, let's go to this illustration where NPV, our trial one was NPV at 10%. In that case, NPV was positive 2318. But we need MPV as 0 to calculate IRR, right? Our IRR is that rate where NPV is 0, correct? So 10% is not my IRR. This is sure because at 10% my NPV is 2318. Likewise, we did for trial 2. Trial 2 was at 15%. Now in this case, when we use 15% as discounting rate, my NPV comes to negative. Are you getting this? My NPV is negative 13,120. So it fell down from 2318 to negative 13,120. It fell down from positive 2318 to negative 13,120. So by increasing the rate, by increasing the discounting rate by 5%, my NPV, see here, it fell by 15,438. Are you understanding till here? Any questions till here?
No, sir. Clear.
Understood till here? I don't want to fall it down by 15,438. I just want to fall it down by 2318 because if I fell it down by 2318, it will be 0. I will reach at 0 point. Any queries till here?
No, sir.
So proportionately, how much rate I need to increase? Proportionately, by how much rate I need to increase? So we did cross multiplication. By if I increase by 5%, my NPV fell by 15,438. I don't want to fall it by 15,438. If it falls by 2318, I'm sufficient. I'm okay. I'm satisfied because I want to reach at 0 point. So to fall my NPV by 2318, by how much percent I need to increase this rate? So I did cross multiplication. 2318 multiply by 5 and divide by 15,438. This cross multiplication we learned at our school levels. Okay?
Yes, sir.
So I need to increase my rate by cross multiplication. Answer comes to 0.75. So I don't have to increase the rate by 5%. I don't have to increase the rate entirely by 5%. If I increase by 0.75, I am done. Are you getting this?
Yes, sir. Clear now.
Clear? Sure? Okay. Thank you. Thank you, everyone. Now our next session for investment decision is on 1st of November. Please revise all the techniques. Please try to solve illustrations from module. Please try to solve it from RTP, MTP, and ask if you have any queries in the next session. Okay? Thank you, everyone. Have a nice weekend. Have a good evening. Thank you.
Recording stopped.